May the 10th after the market close, and today we are looking at a chart of SPX here quickly on a 2 days 5 minute. And today was Thursday. The market just ran up early in the morning and then it dropped, and then it just went on a sideways action till some selling came at the last 12 hour, which is what they do at the last 1 hour. These are institutional traders, and they just pushed the market back down here. It tried to recover but didn't, so it only added up 3.4 gains in the market. And that is why we are going to look at the 20-day moving average, 20-day 30-minute chart, and pull out and look at what the action is. This is what is happening here. We have been flirting with that 1355 level for a little bit since April the 8th, May the 8th, and if I am correct, this is May. I don't know if I said April 10th. No, this is May the 8th, and we have here this flirtation with this line is not very healthy, because every time it starts basing here, there is a possibility it can break down here suddenly and then move down quite a ways, because there is empty space below that. And so it is the reason the market is kind of in a downward range. It's in a bottom end of the range, but it is unable to pop up here and go up here and recover quickly like it used to. And since the bad job numbers came from last week, today the first time unemployment claims came in at 37678 or something, which is a lot better than expected. And there were some other news as well for the Spain to nationalize one of their banks. And so these are the things that are events that are happening in the stock market, which is affecting its direction. But I guess the overall state of affairs in the economy and the slow growth and disappointment is creating something like that is 2008, like it used to, and something which we have seen before. So that is what this thing is. You could see, let's pull out here at 9-month chart and take a look at it here at 9-month, and you can see what is happening here. It just went down here twice, 3 days in a row. We have been flirting with that level, and that's why making me very uncomfortable. Even though the stochastic is oversold and has a hook in it, but it can still break down and go down towards the downside, which is direct here 1275, and that's what you really don't want to do. On RUT today we closed that position and for break even, and that is the same situation here. We're sitting here flirting with it. Every day we take a dive here below that trend line 785, and today we just squared off here and is a hook here, and if we're gonna move up higher we don't know. So we closed the trade. There's no point taking this extra risk, because if it drops here it's gonna go to 750, which is our short strike, and then it'll create all kinds of problems. PCLN had good earnings. The second quarter guidance was $7.20 to $7.40. The street would expect $7.38. Sold the Dixie off completely. They sold the stock market off, and today for the first time that PCLN has dropped below its 50-day moving average at 1681, and that has not happened since January the 17th. So after this is the first time the bears got into control with a heavy volume, 3.1 million shares. This is the volume for the drop in due to the after hours and some other stuff that was going on. And we need to be watching this thing, because if it is dropping here, then what do we do here? We need to take some action here quickly. So PCLN is hanging in there below its 50-day moving average for the first time first time since January. Apple, on the other hand, has not scored any progress either. It's just sitting there and trying to make a little curve and trying to go up here with the volumes decreasing. And other stocks have been decimated here, as you can see. FOSL, this stock was a darling, and now it is all decimated here completely to 78. It dropped like rock here. That's how you will call it. Some other stocks which are doing not too good, ULTA, and that's the last one I'm going to take. That is also sitting there below its 50-day moving average. The direction of the market is precarious.